All right, welcome. Thank you for tuning in to Coffee with Cooper Eagle. I am here with Andrew Cooper, our president and founder of Cooper Eagle, and Dan Cooper is our Cooper Eagle ambassador. He was also Cooper Eagle's first client, and he's Andrew's dad. So today we are here to talk about qualified charitable distributions. So this is an important topic for anyone who is age 70 and a half or anyone who plans to be age 70 and a half. So hopefully that's all of us. All right, so I'm going to get started with a joke. Um, and today is Halloween. We're recording this on Halloween, so this is a Halloween themed joke. Why don't mummies take vacations? Because they're afraid that they will relax and unwind. Womp womp.
Terrible. Honk,
Yes.
honk.
All right. All right. So let's get into the topic, qualified charitable distributions. And we're going to start really with the basics. What is a qualified charitable distribution? Often abbreviated as a QCD. So a QCD is a non-taxable transfer of funds that moves money directly from a traditional IRA to a charity. To be eligible to make a QCD, you must be at least 70 and a half years old at the time of the transfer. So that seems simple, but Andrew, can you tell us why QCDs are important or why a person might want to know about a qualified charitable distribution?
Yeah, Becky, you need to know about a QCD if you are 70-ish or older, and we'll talk about 70-ish a little bit later, if you have a traditional IRA, and if charitable gifting is a part of your life or you want it to be a part of your life in the future. And finally, if you want to reduce your taxes, your taxable income, you should be giving through your traditional IRA through a qualified charitable distribution. So why would you do this? Because if you're already gifting, you're gifting out of cash or savings or other investments. And if you're gifting $10,000 a year now, you can have that $10,000 a year come out of your traditional IRA, and you get to keep that $10,000 a year in your cash or checking or savings account. This also lowers your IRA balance because RMDs are going to begin at some point in the future for you. And again, it also lowers your federal taxes due. So those are some reasons why you should be gifting. That's who gifting QCDs would apply to. Becky, I also wanted to show a quick example, if that's okay, from Charles
Yeah.
Schwab. This hypothetical fictitious couple, husband and wife, has roughly $240,000 of income together from all sources that could include Social Security, pension, RMDs, any part-time jobs, things like that. Their RMD amount based on their traditional IRAs and their age just is a made up $25,000. There's a calculation. We're not going to go into the calculations right now. They have standard deductions of, in this example, about $33,000. So their net taxable income on which your federal taxes are calculated is about $232,000. If this couple gifts $20,000, the example on the right, through a QCD, the same couple with about $240,000 of income and about $25,000 of a required minimum distribution. In this case, 25,000 or 20,000 of the RMD goes to a qualified charitable contribution. So they're only going to have to take a $5,000 RMD, the same standard deduction. Now, instead of about $232,000, their taxable income is about $212,000. What's the financial impact of that? Who cares? In these two examples, Schwab says the federal taxes due are about $5,000, $4,800 cheaper if they do their gifting with a QCD. $5,000 is a lot of money, so I think that's very prudent for that couple to do their gifting through the QCD.
Good. Thanks, Andrew. It's
Yeah.
always good to see an example of how it can work, right?
Yeah.
So let's get into some Q&A regarding QCDs. So many acronyms. So Andrew, what are the tax limits for QCDs?
Yeah, changes every year for
Yep.
2025. Each person, either an individual, if you're married, the married couple can gift up to $108,000 tax-free to a charity every single year. And again, if you're 70 and a half, you don't need to take an RMD potentially. If you're 73 or 75, you will be taking RMDs, and the QCDs count again up to $108,000. Most people can't gift that much, but it counts towards their required minimum distribution for that year.
That's 108,000 per person.
Per person, up to
So
per
it's
person for a
really
husband,
over 200,000.
over
Yep.
$200,000. And not
Cool.
that many people can gift that much money, but it's a great way to reduce your
Yep.
taxable income. Yeah.
Yep.
Becky, you've asked me a lot of questions. Here's a question for you. Can a QCD be made from any retirement account? There are several different types of retirement accounts. What do you think?
Um, not every. A QCD can be taken from a traditional IRA or an inherited IRA. SEP and simple IRAs are possibilities if they're inactive. If you are currently working and contributing to a simple or a SEP, you cannot use that type of account to do a QCD from. And then 401ks are ineligible actually as well. So if you have a 401k and you want to use this tool, you would need to roll it out of a 401k into an IRA. And then Roth IRAs, you wouldn't want to use a Roth IRA because Roth distributions are already tax free. So yeah, traditional, simple, if it's an active SEP, if it's an active and inherited.
Yep.
Yeah. All right, Andrew, we talked a little bit about RMDs, and we did a couple months ago, we did a video on RMDs. And so how is an RMD and a QCD different?
Yeah, an RMD, required minimum distribution, is something that generally pushes up your taxable income so that you can pay taxes to Uncle Sam to fund the federal government. Thank you to everyone that does that. While a QCD is a direct transfer to charity and is not taxed, it does not increase your taxable income. So you don't have to have an RMD to do the QCD as we discussed, but if you do have the RMD that bumps up your taxable income, like in our example, the QCD lowers that back down again, and it does count towards an individual's, again, each person's RMD requirement for that tax year. So
Good.
Becky, back to
Yeah.
you for one more. Can I make a QCD? Can a taxpayer and investor make a QCD before they are required to take required minimum distributions?
Yes, they can. You can start taking QCDs at age 70 and a half. We mentioned that before. 70 and a half used to be the age for RMDs. It has changed over the past few years, or maybe several years. But yeah, so if you're 70 and a half, you have an IRA and you give, you can start then. You don't have to wait till your RMD age to do that QCD. So yeah. All right, so we have Dan here. He hasn't been too vocal yet, but this is the part where he comes in. So we've talked a lot about QCDs and why they're important, what they are, but how we want to try to get into the, I don't know, maybe the basics of how we do this. Very practical. How does someone take a QCD?
Okay, very good. First of all, I've done it now for 2 years, maybe three. Um, and it's really very simple if you have a certified financial planner. Um, and if you don't have, in my opinion, you need one. I suppose you could do it on your own, but assuming that you are a person who has charities, nonprofit organizations, churches, this is a great way to give to those organizations pre-tax. That is to say, you put your money into a traditional IRA without having to pay taxes on it, and now you can take it out without having to pay taxes on it. And that just feels good. And it's something that our government allows us to do, but you have to follow their rules. And the rules are simple, but they're simpler if you have a financial advisor like Cooper Eagle or any financial advisor. So we pre-designate, Catherine and I do, every year, how much we'd like to give based on how much we plan to make. And the Schwab account every year, January 1, tells me how much I have to make as a QCD this year.
Yeah.
And so Catherine and I will sit down and say, how do we want to give? We've got to give this money, or we've got to, how do I want to say it? RMD is a required minimum distribution. So we have to have an RMD. The law says so. We can either take it and put it in our pocket, or we can take it and let Cooper Eagle give for us, and that way we don't have to pay taxes. So we have 3 organizations we typically donate to. Our favorite and the biggest is our church. There is a Christian camp near us, and we have a Christian periodical that we like to support. So that's what we did this year, and I suspect we'll do the same next year. So it's a quick call to Cooper Eagle, and the ball gets rolling, and usually within a week and a half to 2 weeks, the check is received by the designated recipient, or you can have the check mailed directly to your house and you can mail it to the recipient. Your choice. Very simple, and
Yep.
it feels good.
Great. Thanks, Dan. Okay, Andrew, we've gone through a lot of information. Do you have any other thoughts?
Yeah, 2 things, a pitfall first, Becky, and then my closing thought is taxes can be complicated with QCDs. At the end of the year, you have to communicate very closely with your CPA or tax professional, because you're going to get a regular 1099 that you took money out of your IRA, and you have to keep good records with your CPA and your charities that you're designate to. So you're making sure you record that distribution as a non-taxable distribution. So that's important. I'm so happy to have Dad on the recording with us, because my parents are very happy people, and I think they're very happy people because they do what all of our happy clients do. They have little or no debt in retirement. They spend a lot of time with family and loved ones, and they gift and give to a lot of important organizations. So a QCD is to do a way to do some of those things, and also the bonus of paying less taxes. So huge thanks to Mom and Dad for being great examples for me, and hopefully for our other clients as well, as a great way to gift and selfishly help themselves by paying less taxes.
Great. All right, I think that is all for today. So thank you all for tuning in. Thank you, Dan and Andrew, for all of the information and experience. And I have to say this last part all the time. Each client scenario is different. Cooper Eagle LLC is a registered investment advisor. This is general education and not to be taken as financial, tax, or legal advice. Please consult with a certified financial planner, licensed tax professional, or an attorney about the details of your unique situation before making any changes to your financial plan. So happy Halloween. Thanks for joining.
Thanks.
Thanks, Becky. Thanks all.
Thank you. Yep. Bye-bye.